Hello and welcome, everybody. This is Chart Request Live. We do the show twice a week, every Tuesday and Thursday, right here on Stock Market TV, 1 o'clock Eastern Time. Joined, as always, by my esteemed friend and co-host, Patrick Dunwill of the Chart Report. Pat's on the charts today. Are you excited?
Oh, I'm excited. This is my favorite time of week, Steve.
So Chart Request Live has returned. We missed you while you were gone. You're back with us now. I see you.
Back. You're
In
stuck with me.
All right, so listen, it's Tuesday. I think we have had some bullish price action for the past couple of weeks now, coming off of this really nasty thin breath situation. It's expanding, but not a ton. Where's your head at, for the back half of the year, just based on kind of the developments in recent weeks?
Yeah, I mean, I think the way you're thinking about breath, which for listeners who don't know your thoughts on breath, I think you're thinking about it the right way, which is just, we're not in the point of the cycle where we need to be overly worried about breath. Sure, breath is not great. I'd love to see some more participation, but the mega caps are doing their thing. That's exactly what they're supposed to be doing, right? So it'd be nice to see the rest of the market come along. I think we will see that maybe after the election or in Q4. But as bad as breadth is and volume's really just kind of fallen off, the market's holding in completely fine these last 2, 3 weeks.
You know,
So yeah, all good from my end. It's a bull market.
it is all good. And I 100% agree with that. I also think what our friend Larry came on Spaces
Yeah.
and said, in the last hour was pretty prescient, where he said sector rotation, where is it? What sectors are picking up the slack? Drop the word sector. It's just rotation. And sometimes it's intra-sector rotation. So right now you're seeing some steam maybe very slowly come out of the semiconductor AI trade. It could rotate into other tech subgroups.
Yeah, I thought your point was very good that it's not just uh, sector rotation, it's intersector rotation. I thought that was a really interesting way of thinking about it. Because you know what? I feel like a lot of the times that's how rotation actually looks. We think about it as this like clean, out of tech into energy kind of thing when it's way more complex than that.
No, it's not always out of tech into industrial. Sometimes it's out of banks into insurance companies or out of semiconductors and into software, right? So think of it
Right.
as sector rotation, and that's fine too. Sure. Do we think we'll look back at the end of this bull market cycle and say, oh, look, industrials finally resolved their range, financials finally resolved their range? I think the answer to those questions will eventually be yes. But do they resolve their ranges tomorrow or next week or even this quarter? Or does it happen in Q4 or early next
Right.
year? We don't know, but
Right.
it's already working.
Yeah, like something like ITB, we've talked about this a lot today.
Yeah.
And, is this going to dig in? Is it going to be a top or not? Even if it is a top, which I agree with you, I don't think it will be. I think we will clean this up. Even if this head and shoulders ends up playing out, it brings you back down to like where we were where we broke out. So the structural breakout can remain intact even if it does correct, so that whole bull market thesis can still stay alive even if some of these leaders do correct here.
What you're saying is that there's room for a deeper drawdown without the structural trend being impacted.
Totally, yeah.
Yeah, I hear that. At the same time, I don't want to see this little tactical top in a group that's been an early cycle leader like home builders. I want to see this damage repaired like now,
Yeah,
like an
yeah,
hour or tomorrow, or at least by the end of this week. I don't want to see home builders scrounging around in this range that you've just drawn. I don't
yeah.
want home builders retesting the prior cycle highs. I
But
think,
but let's say that it does correct here, and I know we got to get to the mailbag soon, but let's say you do get this correction. Do you think the broader market, I mean, the broader market can handle that, right?
yeah, but another 15% in home builders doesn't make me feel good as a stock market bull. That's
Right,
one
right.
of those like pro-cyclical, like economy stocks sort of trades that tells you a lot about the broader environment that we're operating in.
Yeah, I mean, if that plays out, you're probably at the very least seeing digestion in the market, if not the market coming down with it, right?
I think that happens in an environment where the broader market's correcting,
Yeah, yeah,
right? Which isn't the bet we're making. We're making the bet. We're trying to make the bet that the broader market has kind of been correcting. Breadth has
Right.
been really thin. Sure, you could look at the Qs or even SPY and say, no, we're just steadily dripping higher. If you look at most sector indexes or more equally weighted indexes, something like small caps or value line, you're just seeing sideways. Like throw up value line. Like,
Yeah.
you know what most stocks have done this year? Same thing as home builders.
What
It's
is the
that it's that we're betting that it's
yeah, there you go.
already been an extended corrective period. That's it. Yeah. Well, like look at that.
Yeah, just
Big ramp up,
grueling.
big ramp up off of the October lows from last year, and it's been sideways ever since. So going on more than 6 months now.
Yeah.
So we're making the bet as stock market bulls that the broader market has been correcting for 2 quarters now. And now it's time for these indexes to start to look more like SPY or Qs. You ready to hit it?
Let's hit it.
All right, mailbag. First up, Mark, is it possible that a stock like Celestica, that reminds me of Celestia, which is a crypto, but he's talking about Celestica, CLS. Is it possible a stock like CLS can continue to outperform when its peer group, which is the DJUSEC, which let me check that up, continues to underperform the tech industry? That must be the electrical components industry group.
Yeah, must be, right?
I'll double check while you're charting it out, but I think electrical components have actually been quite strong.
Yeah, because there's some like semi manufacturers I think that kind of get grouped in there. Could be wrong.
Here's the
But is it possible? First of all, yes, it's definitely possible. Um, anything can happen with thing things. Just because it's in that sector doesn't mean it necessarily has to follow it. Look at something like struggling to think of an exact example. Oh, Twist Biosciences, right? We were just talking about that before. Genomics stock, it should be doing terrible, but it's outperforming the rest of them. So this one obviously have this little base drawn out here where it broke out last year. And I think you want to fib it out for looking for potential levels to take profits at. So here we are above this 54 level, call it. And if we're above there, looks like 85 is your next target. If it can't hold that, then you're looking at a deeper correction, probably to 34. Momentum, not great here. You know, it's not getting overbought here, but it's still in a bullish range here. I mean, this could definitely keep going for quite some time.
And you know, I think it's a thoughtful question. It's a great question. You know, considering the peer group, when considering a stock or an individual component of that.
Totally.
So, I don't think we should look at electrical components like it's a laggard group. I think electrical components have been great. So why don't you just pull up the NASDAQ index? I prefer the Dow Jones indices for the subgroups, but they do have NASDAQ on TradingView. So if you just type in electrical components, let's just take a look at the peer group.
NASDAQ or
NASDAQ US benchmark, the third one. Yeah.
total return?
This is just going to be one of those probably not a tops, right? Like we could draw this up like cybersecurity or software, internet.
Yeah, I was gonna say it's that same theme we've been talking about, right? It's that yes, it's in something that has been a weak subsector, but the tech sector, what if we see that rotation into those areas within the tech sector that haven't worked? Something like electrical components could be there, right?
It's a great request. I think that's the right way to be thinking right now, right? Looking outside of semiconductors into other tech subgroups and trying to spot the leaders there.
Yeah.
Next up is Gerber. What are the Tesla support and resistance levels? Holding shares for the long term. If he's holding for the long term, Pat, I would zoom out because I'm so sick and tired of looking at the Tesla daily chart because it's such a
Sorry, wait, what did you say? Did you say what's the ticker? Did you say Gerber?
long-term levels in Tesla.
Oh, okay.
Up and down. Yeah, zoom out. Just get away from this mess, though. Don't. Seems like he's got.
Yeah. Long-term levels, you're saying, right?
Yeah.
So what's playing out right now is this head and shoulders here, or this kind of rounded bottom that's playing out. You're claiming that 200 level, which is pretty important. So
level. Look at all the touches there.
yeah, Um,
Sides for the past several years.
I know you're not a huge fan of trend lines, but I think this is an important one here. It's been there since the peak. So I think you want to see that cleared if this really is like kind of a durable bottom and we are going to eventually see all-time highs within the next year or so.
Yep.
Or we could really get there by the end of the year if this thing really takes off. What do you think, Steve? Is that
Oh yeah, easily. This could be at new all-time highs by the end of the year. This is Tesla.
yeah, I mean,
I would also draw a line around 300, Pat. Yeah, so there you go. Downside. So this is why, like, I'm constantly on the morning show being like, yeah, Tesla's probably not for me. This range is really can be drawn as a $300 range with 100 at
300.
the lower bounds and 400 at the upper bounds.
I see what you mean. Yep. And then treating 2022 or 2021 like kind of a blow off top of that range.
Yeah, absolutely.
Yeah.
So, like, it's hard for those of us on shorter time frames to look at this and want to get involved, right?
Yeah,
I got $300
absolutely.
range on a $200 stock. That's insane.
Yeah, I mean, I think you hadn't gotten in spaces yet, but I was talking with Spencer. This is one of those stocks where I don't know if you've heard that quote, but like markets only trend 15% of the time, and the rest of the time they're moving sideways. It's like this thing will spend 5 years just going sideways and being a mess, and then all of a sudden, if you're not in it for that 1 year,
Yeah.
then you miss out on all the gains. So
Then it adds 500 billion in market cap over the course of 3 months. That's how
right, right. And Spencer brought up a good point. This thing really led after COVID. It really led. So, and it hasn't participated really at all through this bull market. So, what is that going to mean for the broader market if this thing starts moving? But long-term levels, yeah, Steve's absolutely right. 300 is an important one. Beyond that, you're looking at the all-time highs around 410. But I do think this thing's shaping up. The path of least resistance is higher. And, the end of the year is right around here. So could it kind of continue shaping up like that? Yeah, absolutely. Could get there.
I think if you get 300, you get new all-time highs. What would the range high and range low VWAPs show us?
Interesting question. Let's check it out. The range low, or would you use this?
That's it.
Just make this a little darker. So
Okay.
coming in right at that level that we just busted through.
Big one.
In fact, that VWAP is kind of defining
Look at that.
the
Now
lower
look at
bounds
that.
of the range.
So there's where you have what's going on, right? Those
Yep.
VWAPs always keep you on the right side. Notice how those VWAPs come in exactly where Pat drew the two key levels right now for price, the big green area, and then the trend line. That's really going to get you done.
Yeah.
I don't think you want to be long below the green WAP. Or I'm sorry, I don't think you want to be short below the green WAP.
Right. Yeah, and I'm pretty sure the 200-day moving average is in there too. I mean, we could just stack reasons why this 200 level is important.
Yep.
But
And
we
you're
don't
seeing
even need to know
momentum.
more.
And notice the momentum, right? Bulls
Yeah,
are,
that's a
you know,
great
bulls
point,
are
yeah.
great the last 2 days here. That's because these are key VWAP levels that are being taken out.
Yeah. Now you said short interest isn't that juicy right now, right?
No.
It's
And
not.
you're
Yeah.
going to get some chop here. I mean, Brian Shannon was just tweeting about this one too. This is a pretty logical level. I think if you got long for a trade, probably want to be taking profits around here.
Yeah.
I would expect more chop, more messiness. Then eventually, I think 300 is confirmation here. And then, this is something you probably want to just own and not trade. Like this to me is a lot like other Mag 7s. Like, yeah, you can go trade it, have fun, but I just want to tuck it away. Something like this, like you talked about, Pat. Just zoom out for everybody before we move on and just show.
Yeah, and real quick, if even if you did, to your point about the move is probably done in the short term, or at least most of that move in the short term, if you had played this head and shoulders, it's kind of completing. I guess it's only about halfway to where a measured move price target would be, but it doesn't have a ton of upside left here. As bullish as this action is, I definitely wouldn't get long today. I'd be looking for a retest of that 200 and then playing it back to 300.
Yeah, I mean,
But yeah.
Daily RSI is at 80. We're stretched here.
Yeah.
With you. Back to the mailbag. Joseph, Hi guys, I have a small position in the Google. I want to buy more. Do I buy now and pay later? Or do I buy now and wait till later or sell? I want to hold it for the next year. I added something in there. So does he buy now or wait till later?
For Google?
Yeah, he wants to hold it for the next year.
I think you hold out. I think you wait for some sort of pullback here. That's tough though. I mean, you're really kind of in the middle of no man's land here. I do think it's probably got more upside in the short term, probably playing it back to that 194 level. But from there, who knows? It could consolidate for a few months, or it could come back and retest this. So I wouldn't be getting long here either. I think most of the move is done, as you can see, or at least from what I think. If it does get above that 194 level, then you're looking at 220 or 262.
You wanted to be buying this one on the consolidation pattern breakout around 150, right? Then you'd already be up 30% and you'd feel good about this trade. And maybe you can add, the other half of your position on a breakout through 194 or something. But I'm with you, Pat. That target could be hit, and then there could be some big backing and filling. Where does that backing and filling take us? I don't know.
Right.
For now, kind of no man's land. I'm with you.
Yeah.
All right.
And, we're seeing that 161 extension play out in a lot of different things. Here's Apple. I don't have it drawn, but I guess if we go back here. Here you can see we're testing that 161 extension, and we have been ever since Apple broke out after earnings. That's been the level that it's been battling with. You really had, it broke out and hit the target in pretty much the same move. In 2 days, and then it's just been sideways ever since. So another one that you just got to own, right?
Big momentum out of Apple over the past month. Big momentum. Yeah. For a $3 trillion company, it's.
Do you think it's done here? Do you think it just kind of consolidates here for a while, or back in the phone?
I loved it. I loved it where you had the circle drawn. I was very involved, but Apple, the way I'm typically playing Apple is I just buy it and don't think about it, and I hold it forever. So it's still going on, but I'm not trading it here.
I just remembered we used you for chart of the day when you were talking about this failed move here, and sure enough, played it back to the range, and then you got the breakout too.
And that's what I'm talking about when I say home builders need to make a save. Like Apple was down there for 2 days.
Yeah.
That's how the best failed breakdowns look.
And you pulled out the same playbook for software here, right? That brief, it just pierced it real quick and then boom.
So if something like DHI was green by the time, we all leave our desks today, I would say, oh, wow. But the longer this hangs out down here, the less I like it.
I think it does have a couple days left. I think, I'd wait a day or two before I called it a true breakdown. But
trust me, Pat, I'm waiting. But when you're short puts, you have to be careful, right?
You don't have 2 days,
But it gets a little risky down here. So absolutely. I'm using the intraday lows from today. If we're below there tomorrow at the close, I'm covering the puts, and they will not pay for the calls the way they normally do. But we'll see, right? Because this worked for software, this worked for Apple, this worked for so many other things. It's working for Solana now. I think it's going to work for Bitcoin later this week or next week.
Right.
These tops typically do not print; they fail in the context of uptrends. Next chart, Jonathan, what do you think about AMAL? Looks like it is just breaking out now at 27.
AMAL, huh?
Yep. And then we're coming to you, chat.
Ooh, okay. This might be a candidate for the winner today.
Look at this thing. Oh, yeah, I know this one.
You know this one?
Amalgamated Financial Corp.
Man, I've been seeing so many just random financials popping up on my scans.
Fintech, it's financial software is absolutely crushing it.
Really? Wait, is there there's ARC-F. I haven't checked that one in a while. Is that doing okay?
It's not even that. It's stuff like AppFolio and Alchemy. It's like ATM software, restaurant software, insurance software. AppFolio is real estate software.
I was looking at a stock the other day. It was insurance software.
Yes.
I forget what it was, but
But these stocks are great. The ones that are like industry specific softwares, if they become the market leader or the industry leader in that space, like these could be some really, really good stocks.
all right. So this one, nice cup and handle here that we've formed over the past 2 years. You
really
tried to break out of this like what 1 year base here in December and it couldn't do it. Then we built this nice constructive handle here. It's above 27. I know he said it looked like it was breaking that. You could use 31 as a target, and that's the extension from this handle, so to speak. Or you could use the 161 from the base, which is for the cup, at 35. So 31, maybe take half off, move your stop up to break even, let the rest run to 35 here. But either way, that's a decent chunk of upside here, and you have a clear level where you're wrong at. If it's below, I wouldn't even let this thing get below 2650.
Yep.
But yeah, this thing looks great.
I like this a lot. This looks like it's about to be a fresh breakout. This also looks like it is a leader in the.
I was going to say, Steve, all day you've been talking about how bullish the financials have been behaving. So,
and this is a bank.
It is. Oh, okay.
Software is not fintech. This just sounds like, any other regional bank to me, maybe with some heavy investment management exposure. But yeah, 27 all day. You're not going to find regional banks that look like this. Some of the big banks look like this, which leads to our next request. Why don't you show JP Morgan? The best bank that you'll find right now is this.
Yeah, this is looking real nice. Yeah, let's look at the whole base here.
I joke, it looks like a tech stock, right? But AMAL is JP Morgan, or the way JP Morgan looked, I don't know, earlier this year.
Yeah. I mean, the only thing I don't love here is this bearish momentum divergence. But again, I think you got to be forgiving about those bearish momentum divergences. And they can also resolve themselves really easily too,
We have to forgive momentum for being slow sometimes.
Well, it's that, and it's also like it almost doesn't matter until price reverses. So it's like, if price is at an all-time high, should I really be worried about this divergence? I should be aware of it, but am I going to go out and sell my whole position or even get short? No.
So that momentum divergence is not confirmed until the price high from the momentum high is taken out. So why don't you just talk about that?
Wait, say that again?
The way that we
oh yeah, absolutely. Yeah. So what he's talking about is, so this RSI divergence here is because price made a new high here, but RSI peaked back in March here. So as long as it's above these March highs, as long as price is above the March highs, it's all good. No problem. Be aware of the divergence, but don't act on it. Don't but if it does break those March highs, then it's a confirmed divergence.
And what is the RSI 14 as a momentum indicator? Let's think about it. It will almost always lag price. Why is that? Because it's simply using a smoothing mechanism of the trailing 14 days of price, right? So any one day, say JP Morgan rips higher 5% today, that 5% is then smoothed out with the prior 13 trading days. It's always going to lag for that reason, right? Price is going to move before it, then momentum is going to catch up and confirm it. So you never want to scare yourself out of a good trade where price is working because there's a potential momentum divergence. You need some concept of, how do I get confirmation that this is a real divergence to worry about? We would do it something like that. We would just find the equivalent price high where the momentum high occurred. That's your line. If you want confirmation for some sort of bearish divergence, you get it there. That would be, I guess, 200 in the case of JP Morgan.
Yeah, and I think you got to anticipate some resistance here at 217. Maybe, who knows what that looks like? Maybe it's a consolidation for several months. Maybe it's a sharp correction, or maybe it just blows through. I think that's unlikely, but if it does, then you're looking at 289 is the next.
All right, so we got some requests in here. We're gonna listen. You want to do PG real fast, Pat?
Sure.
I almost want to skip it because it's a bull market, so I don't know. We'll talk about some sort of blue chip staples company.
Right. I mean, hey, it would really go with the whole bull market thesis if this breakout failed, wouldn't it?
Yeah, it kind of would.
And this is a very bullish pattern here. This is an ascending triangle. So if this fails, that would be very bullish. If this bearish pattern fails, it would be very bullish. And again, this is a defensive stock. It's the kind of poster boy of the consumer staples sector. So if this thing does have a failed breakout here, then it's going to be, I would interpret that as bullish information. But you don't have to even see it as bullish, but it's not bearish. So
what Pat's trying to say is these stocks shouldn't leave.
right,
So
right,
if breakouts fail in staples names during bull markets, that's fine.
right.
These are the stocks that we want to run to and own in bull markets.
But it also doesn't have to fail. Like if it does just stick this and it's a normal breakout, it's not bad for the market.
No.
It can participate. You don't want to see a lead, as Steve said, but it can participate. The breakout doesn't have to fail. It wouldn't. Yeah.
You don't look at some sort of bearish pattern in a staple stock and interpret it in the same way as like a bearish pattern like the home builders. If that
Right.
home builders top prints and we're sitting here looking at lower price in home builders, we're kind of like, ooh, I don't know. But if you get some sort of bearish pattern playing out in a staple stock, it's like, yeah, it's a bull market. Nobody wants these stocks.
And hey, look at this. Down here at RSI, I mean, it hasn't even been able to get overbought here. So not the strongest sign on a breakout. That's almost even worse than a momentum divergence. It's just the fact that momentum is very weak.
Yeah, I couldn't be less interested in this. So next up would be Palantir. Looks like Kathy Wood bought some more, according to Mark.
Hey, this one's shaping up nicely. I can't remember the last time, because we get asked about this one probably every week, right? Like we definitely look at this stock between the two shows we do. I'd say at least once a week. So this is a fan favorite. A lot of people waiting on this stock to shape up, and I can't remember the last time I saw it and said, "Hey, this thing actually looks ready to go."
Oh yeah.
Actually, I do remember the last time I thought that, and it ended up failing. Remember that?
No, I don't.
I think that was right over here, was it? No, it was earlier this year, so maybe it was this breakout. Yeah, it was this one. Back in maybe it wasn't. Anyway, so I guess it's not completely out of the woods, but really important that it's holding 25. I think if it's above 25, then you're looking at a move back to all-time highs. All-time highs are always messy on this one. Like what even is all-time highs, right? Because you were there for barely any time, but 45 would be the intraday all-time high, and then on a closing basis, you're looking at 40, 39.
Yep. I love how you zoom out and draw that shelf, because that was a big level. You're saying you remember Palantir from last time. Last time I was adding some significant exposure to Palantir was probably late 2021. That looked like a base. Zoom into that period.
Late 2021.
Yes, that looked like a base.
I see what you mean. Yeah, like this.
60% drawdown, and I said, "Oh wow, I'm gonna load up." And then
I see what you mean.
90% drawdown, and now we're back there. So I'm like just now getting back to break even in my long-term account on Palantir.
You're saying like this, right?
Yeah, I was drawing it like that, and then it failed miserably, right? But that's where I was adding. So when I look back at my brokerage account now, and I look up the lot details of my, position in Palantir, it's got all of these purchases in the, mid 20s from 2021, and now we're finally back.
Oh man. Yeah, but this thing's definitely working in the right direction. I think that one I was talking about, and we all got very bullish on this one. I remember in our spaces we were all getting very excited. Sorry, I can't really. It's being all weird. But yeah, this breakout totally failed, but here we are, nicely above it now. So I think in the short term, 25 gets you 40. If you do get 40, 40 gets you 59.
Yeah, and then hey, 59 gets you blue skies and all-time highs, and then who knows where this thing's going. All right.
If this one starts working, this is one of those stocks where I can see people getting a lot of FOMO.
Yeah, absolutely. They will. BFH, then CDNS, We'll rip through these in the chat in the next 5-10 minutes.
This is BFH, you said?
The Bread Financial. This is one of Sam's favorite trades on the sheets right now.
Okay.
He's into the buy now, pay laters.
Yeah, that seems to be quite a theme. I mean, I'm seeing so many of those stocks. I don't know how all these companies can exist together, but it seems to be a hot industry.
You know why? Because Apple and Amazon don't want the business. If one day they change their mind, goodbye to all of these guys.
What would that even look like? You're saying like with like the whole Apple Pay thing and the Apple Card and all that?
When you buy now, pay later on Amazon, they're outsourcing that to Klarna or whoever it is, or I think Klarna's Instacart, Amazon.
Yeah,
Amazon.
Uphold.
Apple announced the other day they're getting out of buy now, pay later. The smart companies that don't need a new revenue stream seem to want nothing to do with this business because it's probably a house of cards.
Yeah, and I imagine this, if there ever was a recession or something, this industry would take it on the chin the hardest.
Yeah, nobody's gonna pay. The people,
Right.
you have to ask yourself, like, who are your customers? Like some of the best businesses. We were talking about this the other day when we were going through some of these luxury goods stocks. We were talking about with the LVMH, right? Like that guy, whatever, Bernard Arnault or whatever, has built a massive company of brands that only sell to wealthy people. If you build your brand or your business around selling to people who can't pay, it's only a matter of time until you don't get paid.
Right. No, absolutely. So this one, if it's above 41, looking at 57, but this is shaping up really nicely, kind of that Wyckoff reversal, right, Steve? You get the downtrend line break, you have this smaller base. And I know you like to buy these bases like when they're going right from the 38.2 to the 61.8. I'm more of a fan of buying the completed bases, but often those fail, and these are probably more consistent. And I have been kind of like looking and more aware of them, but yeah, this looks like it's shaping up nicely.
What you do with a primary trend reversal like this is you scale in, right? You scale in, you prepare yourself for false starts and failed moves, right? And you have your levels, and then you slowly build your position. That's what this why coffee and analysis is all about, right? When you're coming out of the right-hand side of an accumulation pattern like this, you just slowly build because you might get some chop and some false starts and some backing and filling along the way. So you don't buy the whole position outright just on a break.
Yeah, that makes a lot of sense here. You definitely don't want to chase, is what you're saying.
Yeah. Next up, CDNS, Cadence Design.
CDNS.
Yep.
All right.
This is a secular leader, old 2 to 100 club name.
Yeah, it certainly looks like a leader. This thing just, man. Wow. Yeah. Looks great, and it's doing its thing. I don't really have anything bad to say about it. We'll check out momentum, but
sideways for most of this year within the context of a beautiful primary uptrend. Sounds like ex semi tech stock.
Yeah. What did they do?
I believe it is a semi.
Oh, okay. But this thing looks great if it's above 325, call it. 325, we could fib out that base. I also want to zoom out too.
Correction, it is a software stock.
Oh. So that would certainly be the right pond, right?
Mm-hmm.
You're looking at 368 as the target.
This is an intra-sector rotation play?
Yeah.
Yeah, packaged software.
Steve, I think you might have coined that term today. I've never heard it used before, but I like it. It makes a lot of sense.
Oh, look at me. All right. Pat Legs is above 327.
You got it.
I'm with you. Jeffries.
Oh, Jeffries.
6-month time frame.
Working out fantastic so far. You can see I already have it marked up here. Man, I got to switch this to a monthly.
This is a financial crisis based breakout. I love these charts.
I know, man. Can you imagine? Hasn't made any progress since then, and it's just now starting to cook.
I spent some time in this office back in the day.
Did you?
Yep.
So really simple one here. 50 gets you 75. I really do think it's that simple. And like Steve said, it hasn't made any progress since then. So I think I don't expect this base to fail. It's coming out of this ascending triangle here. Everything's working. Momentum, yeah, sure. It didn't, I guess you could call this a divergence, but
You don't.
like we were saying earlier, you don't want to bet on a divergence when something's at all-time highs. You shouldn't
This
even
is
be
my
looking.
this is my favorite chart of the day. That this wins, unless it's gonna get taken out by another one of the requests as we get through here. But I love it.
Yeah. Yeah, I think especially longer term play, this is a great one. Yeah.
Yes, that's a great point.
Yeah.
Like you say, you don't expect the base to fail, but you probably do expect it to be a little slow and sloppy.
Yes. Yeah.
That doesn't mean fail, right? A little bit of false starts, a little bit of messiness coming out of the base. That's to be expected. This is a 15-year base breakout, potential base breakout pattern. So be patient, extend your time frame, right? Align your time frame with the chart pattern. So this reminds me of, if you guys are interested with charts that look like this, look down on your YouTube and watch the last show that just aired, the Flow Show with Sean and I. All we did was go through the Morgan Stanley chart. Pat, throw up MX.
Yeah.
What did we do? How did we play this? It's a monster base. Okay, this is a 25-year base breakout, one of the biggest banks in the world.
Oh wow, this is
We went
Part of
all
this-
the way out to January of 2026 and bought leaps because we don't know how long these patterns take. But when they go and you get that initial reaction leg out of a multi-decade long base, you want to be involved, right?
Yeah.
So we gave ourselves a lot of time and then we picked some out of the money calls, and that's how we're playing a base like this. I think Jeffries, you could do the exact same thing with.
Yeah, because these turn into like what we looked at earlier, that Celestica, like
Yeah.
those steady bleeding trends.
Yep.
Those start from multi-year breakouts like this. Like this one started from a 5-year breakout, and here we are looking at it now, wondering how the heck do we get into this uptrend? It's so strong, but where do we get in, right?
I remember
We should have gotten in way back at that multi-year breakout is the answer.
Patrick, I'm old enough to remember when Nvidia broke out of a dot-com bubble base that looked like the one in Morgan Stanley right now. So,
When was that?
I think-
Wait a second. Are you saying back in like 2016?
Yeah, I am.
Whoa.
So you could have bought Nvidia at less than $1. Look at you. That is why we pay attention to these structural bases.
Yeah.
When they go, you have to be involved. We have a less aggressive example. Look at something like AMD.
Yeah, well, I was gonna say
Perfect.
MU right now. That's kind of my favorite longer term base right now. I know we've looked at it
already.
Right. And hey, look where it's corrected the last few days, right? Just
Also,
went right in there.
Yeah, that's great. Look at the nasty wick into the 161. Also, look at how long it took the base to complete. We could have been up here talking about this chart back in, I don't know, late 2021. When was it?
Yep.
Mid 2021. Saying, oh, let's put on leaps, right? And we'd be glad we did
Yeah.
because it took a long time to get started. That's what I'm talking about with something like Morgan or Jeffries. If you are patient and you have the patience and the discipline to put on a setup in a chart pattern like this, they'll be some of your best trades. But they
Right.
could take years, not months.
No, that's an excellent point.
All right, 4 and then MOH, and then guys, we're done. Oh, Dan Marquis wants to got you. That's a good one. We might have to do that.
4. Man, what an absolute mess of a chart.
This is digital payments or something? They do
Yeah.
like Square things?
It's something payments. You're definitely right there.
But this isn't Foursquare, or what is the
What is Foursquare?
Clover? There's so many of them.
Is Foursquare like a Groupon or something?
I don't know. All I know is that the rise of these digital payment stuff, like they want tips when you go to the liquor store now.
Oh my gosh, yeah.
It's
Yeah.
absurd. Do you
Yeah.
tip at Starbucks? Like,
If I do, it's out of guilt. You know, it's
But and I get it, right? Tipping a barista, like a lot of work goes into that. They're like, they're like ninjas back there with the espresso machines. But at the same time,
no, all the good baristas, they're not at Starbucks. They're at the boutique coffee shops.
you're absolutely right. You could tell Pat's a city boy, boutique coffee shops. But like back in the day, this is not a service that we tip for here in America. Now all of
Yeah.
a sudden we're supposed to tip at Starbucks. I'm supposed to tip at Dunkin' Donuts. Are they going to ask me to tip at McDonald's when I pick up my takeout?
Yeah.
Like where are we supposed to tip? Where are we not supposed to tip? I think these digital payments things, these little like white things that they put on the desk and then they flip it around to you and make you feel bad about not giving a tip. It's these guys who did this.
It's these guys. It's their fault.
Yeah.
And toast too, right?
I mean, toast is more for like when you order from a waiter or waitress. That's the screen that she goes back to like send it to
The ones who actually deserve the tip.
That's right. I'm not saying waiters and waitresses don't deserve a tip. I'm just saying it's become a gray area here about who gets tips and who doesn't because they're asking for it everywhere. And I don't know when to be an asshole and when not to be. But for the stuff, I feel bad because there's some work there.
It is funny what we tip for and what we don't. Because like the other day, I think I was getting my tires changed or something, but the guy was super helpful. And I remember thinking like, yeah, this is the kind of person I want to tip. But it feels weird to tip them. Like, I don't know if that's normal. Like,
yeah, I get it.
It's totally like a big Larry David episode.
Anyway, tipping. The best part is when Grant comes to America.
Yeah.
It goes off every time.
Well, that's when you notice it. Yeah, I remember a similar thing with Alfonso there.
Oh, that's cool. All right, this looks great. So you're just gonna draw straight through that blow off from earlier this year?
Oh, I'm sorry. So above 75, here we are testing it again. If you can finally get it this time, then you're looking at 100. You guys know I'm a fan of those kind of round psychological moves. 75 gets you 100, and so on like that. 100 gets you 150, things like that.
I like how the fibs line up at nice logical levels, more or less.
Yeah. Doesn't always work that way, but this one definitely moving in the right direction here.
Some questions in the chat about if they're squeezing them today. I don't know. I think Chewy is hanging in here. I still have some left. I'm looking to get out. Yeah, are they squeezing them? Maybe a little bit. But this asshole comes out. He tweets pictures of dogs. He drops a Form 13 filing. And the stock has gotten crushed. Down 12 points since.
Yeah.
So, like, you want to chase Roaring Kitty into his stupid stock picks? That's one thing. Fine, maybe. But it doesn't work anymore.
Well, and the fact that we're back in this downtrend, that's it for me. That's, you know,
yeah, right.
You what you needed to do if you were bull, you needed to see this level hold, this 36, 37. It didn't. And here we are back in the downtrend a week later. My gosh, this thing, I wouldn't even expect it to hold 22.
That's right. 22 is the next level, right? That's the last line of support. If it blasts back through 22, see you later. And guess what else? There are hedge funds that I know for a fact, Patrick, have marked this moment on their calendar for the last 4 years and are looking to destroy this guy. And they have not 10 times more money than him, not 100 times. They have more money than God.
Yeah.
And they're all going to band together and they're going to wreck this man. I think this is so foolish. What he did was a once in a
Wait, who? Are you talking about Ryan Cohn or Roaring Kitty?
Roaring Kitty. They want to crush him. There are people out there who were really hurt by Roaring Kitty back in 2020 who have just as much money now as they did back then because they've been recapitalized and they're ready and willing and waiting to go and just smash his lights out.
Yeah.
And I think that's what's happening. And that's a huge risk. If you want to chase this guy into a trade, just know there's people with a lot more money than us who want to kill this guy.
That's an excellent point here. Yeah.
Money. So, you know, to each his own. But this is something I've been in Chewy since before last earnings where you have the failed breakdown circled and I'm looking to get out.
Since before then. Is that where the failed breakdown happened? Right? Was this earnings? This candle?
How long the failed breakdown?
Oh, okay.
So shout out Dan Marquise. We're gonna do Dan's because he's the man. Got you. This is one of those like China but doesn't look like the rest of China. So
what's the ticker?
I bought calls in Tal today. I'm gonna sell the puts also. I don't know if I got filled or not. Yeah. So same thing. This is Chinese online education. You look at Tal, you look at EDU. Those are the leaders in the space. And then Got You. That's what Kenny calls it.
Got You.
All the Gotu. It's the Got You because it always gets us.
So he calls it the Jumia. He calls it Jemima. I love that one. Wait, what am I looking at?
Got You.
Got You. Got You.
Got you. But look at this retest, dude. This looks like a hard yet classic textbook retest here. I wouldn't even draw it. Yeah, okay, fine. Yeah. I see.
You're saying, retest of resistance.
Draw the base breakout. We had the August 2022 high and the summer 2023, and now we're retesting that.
Oh, I see what you mean. Yeah.
A little lower. Yeah, right there.
There we go.
So, like, it's a range between those two rectangles you've drawn, but it's also a range coming out of, I think this is a primary trend reversal.
Yeah, this looks like it. It looks just, it's taken a while, but it does look like that. There we go. Also coming in at an important level there. You're absolutely right. $9 looks next, and then 18. 9 gets you 18. 9 gets you a double. Wow.
Did you just log or unlog your fibs?
I just logged it. So what I've found is a lot of the times when you have a chart like this that has an exponential decline or like a very sharp decline, it's when you use the log-based scale or the log-based fib scale,
you're not going to get anything. It's too high.
Well, no. When there is a huge crush like that, you should be using the log one, and then when it's not, then you use the other one.
So that's unlogged, but because there was such a significant drawdown, those price levels are going to come in far higher. If you flip it to arithmetic.
So this is log.
I never do that. But I might start because some of these spec tech stocks that, experience 90% drawdowns, if you're looking at a logged fib, you're never going to get there. Like they're not helpful for us.
And Steve, you'd be amazing. Just play around with it because they do come into play just as much. It's pretty amazing.
Fascinating.
I don't understand it at all. I don't understand the math behind it at all, but
see how charting works? We learn these tools, we relearn these tools, we log them, we unlog them. Basically, this isn't black and white, right? It's find what works for you, find what makes sense, find the indicator that speaks to you, that you understand, that you can, work in your process, that can be valuable to you. It might be, the least valuable thing to the guy next to you, but if it works for you, that's cool.
Absolutely, yeah. Steve, that's why this show is a lot of fun because you never really get to see how other chartists are doing it. So it's kind of cool to see how you do it. And I've picked up a few things, even just from doing the show, even though we've been working together for years.
Absolutely. Pat, do MOH and take us out with that. Shout out chat. You guys are awesome. Earnings for Toast will be next quarter. I hope so, Vog. Dan is in Italy.
Dan the man.
Maybe I read that wrong. What's up, Mark?
Man, this one.
Harminder, how do you like the software today? Try to give the people what they want. They want us to talk software on the morning show. I said, let's do it. Made some charts.
You made a great call a few weeks ago. We used it as chart of the day that, the tops, and it wasn't just software you were talking about. You were talking about cybersecurity, cloud,
internet,
all of those. None of those turned into tops. And here you are talking about it today with the home builders. So definitely pay attention to how that resolves.
So Harminder's picking up what I'm putting down. Thank you for the kind words. But he says Ken has more money than anyone can count. I know what Ken you're talking about. I know some guys who are hurt a lot more than Ken too, who not only have money, but they're backed by people who have more money. And they didn't go anywhere, Pat. Those guys are still here.
Oh yeah, I know
how this roaring kitty blew up their hedge funds with meme stocks. And they have billions. I know Roaring Kitty apparently somehow has hundreds of millions now.
I don't understand. I don't think anyone understands that. That's the big question right now, right?
It's not his money, dude.
There's no way.
They need to send a Wells notice. They need to figure this
out. And
out.
also, if you did have that kind of money, would you be buying GameStop calls with your entire net worth?
Right. So what Pat's saying, you go from 50,000 to 100 million, then you're going to
you have the chance to secure generational wealth for your grandkids so that they never have to work. And then you blow it all on GameStop calls.
The next Roaring Kitty movie or documentary will be far more interesting than the last one, is what I think. Because whatever's going on now here, we don't know. We don't know exactly what's happening, but something's happening behind.
And we'll know in 2 years from now. But it'll come out. It's going to come out.
Well, they'll investigate and they'll find out. I'll also say it's very strange. The Form 13 that he filed for Chewy makes it appear as though this position is owned in his personal brokerage account. Typically, you'll see an LLC with a direct interest reported to Keith Gill. There's not that. It's just Keith Gill, which is strange, right? Because if there was other money involved, you would see it reported in an LLC that Keith Gill has an indirect ownership interest in.
Yeah.
They're making the filing look like it's just him. I find that very hard to believe.
That's interesting. So you're saying, like, even if it was legit, it still looks fishy kind of thing.
Doesn't make sense. If I'm the SEC, I'm like, this will be an easy one. They just need to go in there and figure out what happened.
This will be an easy one. But for MOH, this 245 level is very important. I don't love this breakdown. I mean, first you had the false breakdown, then you had a 5-year or 6-year trend line break. Not a great look here. I think it's probably going to need to correct further. The big question is it going to find support here at 245, or are we going to open up to a bigger decline down to 75? That would be real ugly. But if it does stick around here, then you're looking at this 270-ish level, or I'm sorry, 370. You want to see that reclaimed. And then, of course, all-time highs. And then we're talking, that's not right. But
what's happening?
It's got its work cut out for it. I would definitely be cautious with it, though, if I was long. I don't love what momentum's doing. Here you are getting oversold after it was barely overbought. I don't even think you officially got an overbought reading.
You're getting a big change in the rate of trend, which is illustrated by the trend line break coming off of a failed breakout to new all-time highs. I also think, Patrick, that this one is kind of entangled in this Trump trade situation. Just look at the last couple of candles since the market started pricing in a Republican victory. Certain industry groups have traded, responding to that.
Yeah, that makes sense.
This one's gotten killed since late last week.
That certainly makes sense. Yeah.
No, look at solar energy getting killed.
Or you were talking coal earlier, right? And by the way, a few of those showed up on my buzz scan this week. Arch Coal and CEIX.
Yesterday, coal stocks had their best single-day performance since 2020.
Really? Oh man, yeah. I mean, look at this gap up. Started the week with a gap up. Wow.
You know what else is a part of this and I don't even want to talk about it too much because it is so tactical, right? Like a couple days doesn't make a trend, but the banks are part of the Trump trade too. I think the market is thinking that Trump will regulate the banks in a more fair way, where we can finally separate the big banks from the regionals because they should be regulated differently because their balance sheets are just wildly different, right? And maybe we reduce some of the restrictions, right? Some of the red tape that we have all over the big six banks and leave those regulations because they're good for the regionals, but take them off of the big guys and let them actually go out and make some money.
And that would be great for the sector, yeah.
I think that's what's being priced in. And that's the price action you see in Goldman Stanley, JP Morgan just over the past couple of days, despite interest rates having their biggest back-to-back day rally since February, right? So the banks are telling you that there are forces at play that are stronger than the bond market right now. I think that's huge, right? If banks can prove that they can rally regardless of rates, and again, I'm talking about the big ones, that's big, right? That's a different environment than we've been used to.
Yeah, and this is KBE here. Looks like it could take out the top end of this range that it's been stuck in all year. I think it looks ready to do it this time. It's certainly tried enough times. So if it's above that 48 level, what do you think, Steve? Where is next?
Yeah, I love it. You sell puts at the VWAP at 43, and then you buy calls on the range breakout. That's it.
Yeah.
Right? So Pat, we are done today. Sorry, Wavy, we just missed you. Bring it on. Oh, bring it next Tuesday. So we're done for the day. What was your favorite chart?
Ooh, was it wasn't ADM. It was 80.
Amalgamated Financial or whatever.
Yeah, Amalgamated AM.
ALAM?
Was that it?
No.
Wait. It wasn't AML.
AMAL.
No, Yeah, you're right. Yep. This is my pick from the mailbag, or I'm not sure if it's in the chat or the mailbag, but I like this one only because I know you're picking Jeffries, but that one looks great too.
Yeah. So we had some good financials brought to us today. Maybe that's information, right? Financials are becoming a place that we like more and more. They're looking better and better. It's not just the big banks. It's the broker dealers. It's capital markets. Insurance has been working. I think asset managers look really interesting, right? I think
you know what? I didn't really think about that, but you know how we were talking earlier about how home builders and semis led us? It was insurance too. Insurance was an early leader too.
Yeah. Insurance, early leader. Also, they're like the staples of financials, right? So they tend to be the early leaders, the most resilient in bears and stuff like that. They're not going to give you the beta during bulls, but these are good stocks to just hold long term.
What do you think of this consolidation? This is IAK.
I think it's not going to be a top. You know exactly what I think.
Yeah.
So thank you everybody for joining us. As always, show is canceled Thursday because we'll be celebrating Independence Day here in America. That is July 4th. We will be back, I guess, next week. I think we might be taking Friday off also, from what I hear. We're back next week with our regularly scheduled programming here on Stock Market TV. So join us at 1 o'clock Eastern Time. Tuesday, we'll put Patrick on the charts.
Oh man, we might have to put you on the charts again. You missed your day.
All right, buddy. You got any closing comments, remarks?
No, I mean, thank you guys for all coming up and sharing these charts with us. We always get a few good ideas from it, and you guys are, I'm always impressed with the charts they bring. So keep it up.
Thanks for bringing it, as always, in the chat. We could not do this show without you guys. We are so grateful. And Patrick and I love doing this show, so we will miss it Thursday. But hopefully we're all eating, some nice hot dogs and hamburgers and and 4th of July picnics and whatnot. It's strange having these broken up weeks. Now we've had 2 and just weeks with a day off in between.
Yeah, you know what? It really messes me up for weekly performance. Yeah. If I'm trying to compare weekly performance, most of my things are set on 5 days. Anyway.
No, crypto markets figured something out with this.
They did. They did. Yeah.
All right. So thank you, everybody. Enjoy the rest of your week. We will see you next week on Chart Request Live.
Awesome.